Hey guys, welcome to the party. My name is AJ.
Hello guys, this is Lex. Welcome back to another video, and
So
I hope
today,
you enjoy this one.
yeah, hopefully you guys do enjoy this one. Today was a wild day right before the rate hikes. The stock market was opening up with a kind of a little boost, but market realization basically said otherwise. The market started going down. Let's get right into what was the hot news of the stock market today. We had earnings today of Starbucks, and we talked about Starbucks prior. So this is basically what happened at Starbucks after hours. It's declined more than 5%. Sales have not matched up to potential, maybe because of the recession. Usually we got McDonald's pumping, even after its earnings and everything, but Starbucks isn't following. Chipotle was another big one that was going pumping during the recessionary time, but I guess now people want cheaper coffee. So maybe they're starting to make it at home. But we do have the Starbucks quarterly results. So we can go through that right now. Uh, Let me pull that up real quick. Okay. Apologies. There you go. Starbucks quarterly report. So it increased 11% per global stores, which was primarily driven by the Chinese stores. That, remember when the last earnings we did say that, China was one of the reasons why it did not match or it did not meet earnings expectations. But now China is like fully open, and China store sales increased 3% going forward. And if you look at it from April 3rd year over year, these are still remaining the same. So basically, operating margins have increased, but the revenues aren't, showing that much. But even though there was a 17% increase year over year. Now, with that being said, operating income is up 74%. And not to say you have to when you look at operating income, when you see the 314, why is there a drastic increase? Because year over year, inflation has definitely raised the prices of coffee and how to get them, but you also got to look at the expenses of why this has happened. So that has increased. Income tax expense has definitely increased. Operating expenses are definitely increasing. So store operating expenses and all these are all increasing. So basically, it increased 50%. That has affected the revenues for the operated stores. So definitely something to look forward to. Looking forward to the outlook guidance, it is not looking good. That's definitely the reason why when they have an earnings call where the CEO comes in and talks about what happens. Definitely did not have a good outlook on the future of Starbucks. So they are saying that they're assuming a slowdown coming in, which is good. I mean, which is like, if you're an investor long term, this might be a good opportunity to get more shares, to buy more shares too. Because spring and summertime is like, usually the slowdown time and stuff like that. And then it picks back up during, the rise of Christmas coming forward. So that is one of the reasons why you would see a slowdown in Starbucks sales. Uh, what do you think on this, Lex?
Well, China needs to start drinking more coffee. That's all I know. Otherwise,
China has a lot of other stores too, so competing in China is definitely going to be a problem. And a lot of people are saying that there might be de-globalization instead of how globalization was, where a lot of American companies started going throughout. Now it's definitely slowing down. So that could affect a lot of companies going forward. If you're not, if you're not a company like Apple, McDonald's, Coca-Cola, those when those companies are definitely to watch out for it, especially when Starbucks is being all new going into China. So that definitely affects a lot of sales and revenue going forward.
I think Starbucks forced themselves into the Chinese market because the Chinese culture is more of tea drinkers, not more of coffee. So by nature, the Chinese market or the country as all, I think that's why they prefer tea instead of coffee. But I mean, it's still working for Starbucks, so I'm sure they're gonna still be making money.
Yeah. So, and going forward, that was not the only earnings of the day. Another big earnings was AMD. AMD also down 6.5%. Not a good outlook for the quarterly two earning guidance, which made a lot of other chip stocks react to this. You can see Intel definitely reacted, well, a little positively actually, compared to AMD, which is one of their main competitors. And let's see how Nvidia did. Nvidia did react negatively, is down 1% after hours. So look forward to AMD, Intel, and Nvidia to be very, very volatile going in towards their own earnings coming forward. Nvidia's earnings is, I think, on the 24th of May. So I think Nvidia is going to be a very volatile stock. Now, looking forward to Apple, which is going to be the biggest you know, play going forward. Uh if you are a shareholder in Apple, we talked about Apple previously, the last quarterly earnings. If I pull it out a little more, it was down here around this area when we were talking about it. No, I apologize. It was down here around uh where's January? No, yeah, it was down here. It was down here and it did do a 5% drop. That's when the whole market was usually going down. But hey, that's when the rate increases were high, but the greed level was also high. So the market was adjusting to rate hikes and everything. And Apple was one of the big players of fighting through. It's basically breaking off. So Apple's this level right here is where Apple really hasn't been breaking, especially when once you get to this level, actually, this is when Apple will cross the $3 trillion market cap mark. Basically, it is already the richest company, but once it breaks this, it's basically going to enter the $3 trillion market cap. Now, in this recessionary period, do you as an investor want to bet, if you're especially like an options trader, do you want to bet that Apple's going to beat earnings and go past the $3 trillion market cap, or do you think that's going to go back down? Because I mean, my bet, I don't play earnings. That's my recommendation, not financial advice. You can do whatever you feel comfortable doing as an investor, but me, I'm just gonna sit tight, see what happens. I honestly, let's do a little fun bet again here, Lex. We haven't done so in a while. I think Apple might be going down. I think it went up too fast in this quarter with all the recession fears, and Apple moving to India, because people want to always bet against Apple and they fail miserably. But and I'm all for Apple. I think Apple's a great company, but I don't think this jump that Apple did reflects what their quarterly earnings are going to represent. Microsoft did great, Google did great, Amazon was okay, but Like I said, Apple hasn't been coming out with much newer things, and if there is a recession towards the world with rate hikes increasing and everything, are people really buying a lot of iPads, iPhones, But also keep in mind, Apple makes money daily off of your apps, off of every transaction you made. Apple's also coming out with savings accounts where you people are going to be putting money into that savings account where Apple can use that money and invest in other things too. So keep in mind, this is Apple's a whole nother level of a company, and it's going to be one of the biggest things to look forward to. If it goes down, it's going to bring the market down, but usually Apple recovers really quick. So Apple's the main focus. Keep in mind, tomorrow are the rate hikes. The rate hikes are very important. We're uh, looking for a quarter point basis increase again. And the main thing to listen to is if we do get a quarter point increase, is it going to pause afterwards? And if it does pause, how is the market going to react to that? And also, I actually did want to talk about the rate hikes in another video. So this was just supposed to be earnings, and I know me and Lex have a lot to talk about on the rate hikes in another video. So we're just gonna cut this one short, and I hope you guys follow and watch the next video we're gonna post, because it's gonna be a lot to do about rate increases. And we also wanted to let you know that I know we do long videos where a lot of views where a lot of people have messaged and saying, if it was shorter, we'd be more occupied and more interested in looking to what you guys really have to say.
Well, yeah, I think so we're gonna have to make some more videos, and maybe we can make some shorter videos also. Maybe just listen to what the viewers have to say so we can make that happen for them.
Yes. So sorry to keep it short, but we'll see you in the next one. Thank you.
See you guys. Take care.